Hello and good morning. Welcome to the National Real Estate Post, everybody. As you can see, I have our dear friend here, Barry Habib, once again, who's going to make us all smarter today, which is always a nice thing. Before we get started, Barry, I have to remind everybody that Loan Tech will help you convert your online leads a whole lot better than you're doing now. Incredible system, fantastic CRM, has lots of cool stuff, and you get it all for free for a year. You can't beat that. There's a recorded webinar. You can just click the banner you see here on your left, watch it, understand what it is, and then we tell you how to get it for free for a year. It's really simple, easy to do. Don't miss that, Loan Tech. So, Barry, you're back.
Back. So happy to be here.
Oh, good. We're happy to have you here. So last time we had you on the show, you were thinking that rates were going to go one direction, and in fact, you were good on that, right? I mean, we kind of called that. So.
We took a change. We've been saying lower rates. In the last show, if you recall, I said that I'm a little bit more cautious here. I think that rates are due for a move up, and sure enough, they did. Now, we had been looking for a pullback in the stock market. Haven't gotten that. Stocks hit new highs, so we were wrong there. And I was also wrong on our call on the jobs market. We thought that we'd see a bit of a pullback in the most recent jobs report, and boy, continued to be stronger than our expectations. Certainly 255,000 new jobs is a really strong jobs report. Didn't see it coming.
Okay, but rates still did go the direction that you were thinking that they would, but just a couple of other items. Yeah, you got that, which is really kind of the most important thing, you know what I mean, as far as being a loan originator out there and wondering what to tell your clients, for sure. But at any rate, are you still there?
I'm right here.
Okay, good. I thought I lost your audio, but I didn't. All right. Hey, you were recently at an event where you said there were some big shots there, and it was real interesting to hear what they had to say about the markets going forward. Give us some of your feedback on that. What was the event? What did they have to say?
So it's a really cool event. It's called Camp Kotak. David Kotak puts it together, and they only select 50 of what they call the brightest and the best minds in the financial world. Now, I'll tell you what, I was pretty flattered that I got to go, and you don't say no if you get this opportunity. And, it's cool. CNN was there, TheStreet.com was there, Wall Street Journal covered. It was really amazing to be part of this and be there with a lot of people that I consider to be just amazing as far as economists and who they represent.
Okay.
So, Frank, I've got to tell you, it's a fishing trip. It was great. I caught a lot of fish, but boy, the accommodations were rough, brother. I used to go camping and stuff. But now I'm kind of more of a Four Seasons guy.
Sure.
I'm not used to this, sleeping next to a guy like with this much room in between the two of them. And we became very close.
I imagine.
So no, it was a great event and learned a lot there. Here's a couple of the key takeaways.
Yeah.
The group seems to feel that interest rates, shorter term, a little bit higher, longer term, lower.
Wow.
Even much lower. And we've been talking about that over the longer term.
Oh man.
They also felt very, very good on the stock market. I'm kind of on the other side of that, but it was almost universal that they did. Now, when everybody gets on the same side of the trade,
yeah,
you got to kind of just be a little bit skeptical because a lot of times the market goes the other way when everyone's on one side of the trade. So I'm still kind of thinking that the stock market's due for a pullback, although, as I said, been wrong on that so far. But it was a really fascinating event. We talked about a lot of stuff like Brexit, what could be next? Could it be, Nexit, Grexit,
yeah.
It'll leave, to Portugal, the other ones that they talked about were, Finland could be Finnish, France could be Frunk off, so
yeah.
There's a lot of
yeah. So they're thinking short term, rates might be bumped up, but longer term, they're thinking maybe even lower. Gosh, when does this end? I don't, here's my concern, and I wanted to talk to you about this too, because we chatted about this before we started the call was, right now, the refinance activity, of course, is just keeping a lot of originators pretty fat, dumb, and happy. You know what I mean? I think a lot of people feel like they're great producers when really, in reality, and don't be offended, any originators, believe me, I got in this business in January of 1987, so I'm with you, I'm one of you. But it makes people who feel like they're top producers when they're top order takers is what winds up happening because there's just so much refi activity. But something interesting occurred with respect to refi applications that you had brought up that I think is really important for people to understand. Why don't you fill us in on that a little bit?
Well, it's important to service your customers and do refinances, and we've discussed this in the past. But
sure.
Here's some of the sensitivity of it. They're very sensitive. We saw interest rates go up 0.25%. And the change on a year-over-year basis, refinances when you compare them from this year to the previous year, When rates were at their lowest point, we're up about 120%.
Okay.
They go up 0.25% in interest rates, and now they're up 50%. So the point being is that you could see a rather dramatic move in refinance applications. I think we all know that, but sometimes quantifying it helps a little bit,
Right.
and it kind of can get us refocused. If rates went up 0.25% from here, and remember, a lot of the folks at Camp Kotak think that. I don't think it's out of the question. If we see something like that, especially if we don't get a stock pullback, if we see rates go up a little bit more, refinances can slow meaningfully. And that's why I think it's important to stay on the purchase side. I mean, think about it. If rates went up to 4% and zero, they'd be great. Anybody who's in this business for a long time, you could even imagine
Right.
4% rate, right, with
Right.
0 points.
Right.
But now you talk to a customer and say, 4%?
That's outrageous. Yeah.
What, are you crazy?
Yeah.
So how quickly we forget and lose perspective. The thing, though, is that would not derail the purchase market. Purchases are really strong. You know, we've talked about that over and over. Finally, people are coming to our side. What we've talked about for a long time. Purchases are great. The media's gotten it wrong for so long. But look, purchases have legs. They're going to continue. And even if rates go up 0.25% or so, it's not going to derail
Sure.
that. But as you've been saying correctly, on the refinance side, you will see a lot of sensitivity if rates did go indeed to around that 4% level. Not out of the question. You know, do things like, you know, you've brought this up so many times. You've got listing booster, you've got
Sure.
coupon. These
Sure.
are things that people need to be looking into and doing, because that will keep a lot of their business being generated with realtors, with referral sources on the purchase side. That's the way to do it.
That's all I'm trying to say. Well, today is Tuesday that everybody's watching the show, and you said tomorrow, Wednesday, we have some information coming out. What do we got?
Well, it's a relatively quiet news week, but I'm very curious to see how Wednesday's 10-year Treasury auction goes, and that'll be at 1 p.m. Eastern. And then on Thursday, we get the 30-year bond auction. So that 10-year note auction, it will be very meaningful as far as, from our perspective and everybody listening, you know, what rates do in the shorter term. If it's not well received, we could see some follow through. We could see rates kind of drift a little bit higher and get away from us here. So we want to watch that very carefully. Now, if it's got a big appetite, if it's well received, you know, maybe. But look, in Japan, they were so far negative. Do you know that Japanese rates may actually turn positive? They're only 5 basis points away from being zero right now instead of 40 basis points negative. This all in 2 weeks.
Wow.
So something's going on there. People are realizing that negative rates are not the holy grail. Maybe this Keynesian philosophy not necessarily working, more like pushing on a string. So there might be a bit of a change in mindset here in the global economy. Look, when you buy a negative rate or a very low yielding rate, you're certainly not doing it for the rate of return.
Right.
You're buying it because you think that somebody else is going to take this off your hands. It's a hot potato. You can't hold it. You literally can't hold a negative rate because you're going to lose money.
Right.
So you want to sell it to somebody for a higher price because it's the other person's belief, the new buyer's belief, that rates will go lower still, so they can make price appreciation. So you offload this thing, but eventually the music stops. Eventually somebody gets burned, somebody gets caught. And I think that right now people are a little bit worried about it. And that's why I think shorter term rates, we just have to be a little cautious here and watch it, because of course it's going to vacillate, but I think the bias may be slightly higher in the shorter term. Longer term, I do agree. There's enough out there, especially stock market decline, a potential recession. You know, the election will have a lot to do with this. We'll talk about that more next time, or as we get closer to it.
Sounds good.
But we need to be a little bit more careful.
Okay, good. And that's something that they will definitely have their finger on the pulse of if they're using MBS Highway. Right?
Oh, well, thank you, bro.
Yeah.
Thank you.
Yeah.
But here's the other thing. If you're a realtor or if you're a customer talking to somebody pre-qual, put a little sense of urgency under them, because these low rates may not, they may be really at a great opportunity right now, and rates may go up a little bit here. So right now is a good time.
Okay, great. We can still get MBS Highway for a little while for free.
Love it.
Okay,
yes, please do.
We'll put that link down below. Thanks as always for being here, Barry. Really appreciate your insight and your information. Guys, leave us your comments down below. Barry does chime in and answer those for you if he can. So that would be great. Ask him whatever you want. He's got a big brain and a handsome face with a goatee. So there you go.
And a lot of hair color. So.
All right, you guys have a great day. Forward, share, and subscribe. We'll catch y'all later. Barry, thanks again. We'll talk to you later as well.
Thanks.
See you. Bye.
Bye.